start by introducing and saying good morning, good afternoon, and good evening, everyone who's been joining now. I'm Diana. I'm the head of research and sustainability at GBBC. It's a real pleasure today to welcome you to GBBC's Virtual Members Forum on Tokenization of Real-World Assets, a Practical Perspective. We are a bi-weekly webinar showcasing the innovative work of our members around the world. And today we are joined by Breige Tinnelly, Head of Market Development at Archax. GBBC member Archax is the first ever digital securities exchange regulated by the FCA in London. Targeted at institutions, Archax also has its FCA brokerage, custody, and crypto asset permissions. Founded by experts from traditional capital markets and backed by an accomplished advisory board, Archax offers a credible bridge between the blockchain world and the existing investment space. The Archax team is used to working in highly regulated markets and has a deep understanding of blockchain and tokenization, as well as a vision of how to evolve and open up digital assets to institutions in a transparent manner. Just briefly, before we begin, I would also like to introduce Breige. Breige Tinnelly has over 20 years in debt and capital markets and financial services industry experience with global coverage in legal, financial technology, blockchain, and regulatory technology sectors. Breige has worked across global corporates and ambitious startups as founder and director. During this session, Breige will dive into the evolving landscape of asset tokenization with a special focus on real-world assets and share insight into Archax's latest developments. Beyond tokenization, Breige will unpack how Archax's ecosystem aids institutional players with streamlined access to and secure safekeeping of digital assets. We welcome your questions at any point during today's presentation, so please submit them in the Q&A tab at the bottom of your Zoom screen, and we will take them after the presentation. So again, thank you, Breige, for joining us. I will now hand things over to you to begin.
Thank you so much, Diana, and thank you so much to everyone who has joined today, morning, afternoon, and evening to where you are. Thank you again, GBBC, for inviting us to speak today and to present today, and really to share that Archax journey and provide some insights on tokenization of real world and traditional assets and on the ecosystem that we are building to support issuance, settlement, custody and trading of digital assets. Having been in the traditional world of finance for over 20 years, as Diana mentioned, this really has been a journey, and it keeps getting more enjoyable. Disrupting the traditional world is something that myself and the founders of Archax have been on a journey to achieve. I'll run through an intro of Archax for those who don't know us very well, and for those who do, I'll provide an update on our journey. Part of that journey, of course, is the tokenization of real-world assets, and we are, of course, seeing that as a compelling use case for DLT and blockchain. And it is this really, together with the maturing of the required infrastructure and the increasing drive towards regulatory clarity, which is proving to be a pivotal moment for institutional participation. So today we'll take a practical look. Apologies. Today we're going to take a practical look at how we tokenize within our ecosystem, who's participating and what's driving them. And then we'll also look at the challenges being addressed, which will enable broader adoption. First, let's have a look at our history. When Archax started 5 years ago, it really was with the recognition that the underlying technology could remove friction and inefficiencies of settlement, post-trade, corporate actions, and reconciliations that we all experienced firsthand within the world of traditional finance. We also recognized as a team that once the institutions came, they would want trusted, regulated third parties to provide an infrastructure in order for them to participate in it. No one was doing that at the time. And so Archax set out on this journey of building a new digital ecosystem, not to replace the old infrastructure, but rather to coexist and to bridge the worlds of traditional and digital. And this build really coincided with Archax getting the relevant regulations in place with the FCA, so based out of the UK, the relevant regulation, registrations and licenses, and launching our products. So just at a glance where we are today. So in that time frame, we then become the first and only regulated FCA exchange, regulated broker and custodian. We're also the first member onto the FCA crypto asset register. In terms of our product offering, we are live today with our primary platform for issuance, our custodian, of course, our secondary market, as well as our tokenization engines as well. We face off against institutional players. And of course, as we mentioned, Anna mentioned, we're from an experienced team within the financial services market. One of the kind of significant highlights of our journey during the course of last year was indeed the Aberdeen Asset, one of the largest UK asset managers, coming into our Series A. And that closed during the latter part of last year. Not only have Aberdeen invested into Archax, but they're an example of one of the many managers who are looking at tokenizing their funds. And we have tokenized one of Aberdeen's multi-billion money market funds, for example. In addition to other managers doing the same, we have also tokenized across real world assets in terms of debt, traditional equity, carbon credits, and the like. So we're on this journey of building a comprehensive digital ecosystem across multiple products, across the traditional world and that of the digital world, providing access to an institutional client base. And this is really what the digital ecosystem looks like, with Archax playing a key role in each component. Our vision is really this in terms of what the future of capital markets looks like. And this slide really shows where we are in our journey. The blue line showing where we are live and what we're actively doing in the market today. And the purple really is those products and offerings which are very much on their way. So in addition to the primary and secondary and custody, brokerage, and our tokenization engine, we're looking at and we're soon to be live on other parts of our offering, including our digital CSD via our Monta subsidiary. We're launching new products, staking, lending, e-money and fund management services also, providing really this true end-to-end institutional grade offering. This chart won't be a surprise to anyone on the call today. It really tries to capture the mammoth size of the market opportunity, addressing more than 1,700 trillion in assets, which are likely to become digital. Digitalization of all the world's assets, traditional markets, adoption of crypto currencies, and the tokenization of real world assets. This is the size of the addressable market, and this is the market in which we see a huge opportunity to participate. Now, Archax really is very well positioned to capture that market growth because we really sit between and bridge the traditional and digital world. And we're really well positioned to cover and capture that full spectrum of market growth. So maybe let's just take a little bit step back in terms of tokenization specifically. And we do get asked often to kind of just really underline again, well, what is tokenization? Why tokenize, and kind of how do you do these? What's involved in this process? So if you kind of take a snapshot of what this looks like, tokenization really is the process of putting the ownership records for an asset onto a blockchain or distributed ledger technology. It transforms how we own, transact, and manage assets such as debt, equity, or property. We can tokenize traditional or real world assets, or indeed digitally native issuances as well. Smart contracts that can be built in and around the token enable functionality within and attached to that token. And then, of course, I mentioned that can take a variety of different types of asset. It offers, of course, the end investor the security of a regulated instrument, potentially with the agility and the speed of blockchain. But why bother tokenize? Why bother tokenizing? I mean, the benefit of the underlying technology, which is becoming quite recognized is that it enables access to a global pool of investors for distribution. And of course, it enables access for investors to new asset classes. The efficiency of settlement, post-trade processes, promise of liquidity, as well as potential to fractionalize is really core here. Issuers are able to also manage their cap tables and have a friction-free level of corporate actions. Transparency, of course, is also key. So Archax is a tokenization engine, and we're able then to create tokens backed by any regulated or unregulated real world or traditional asset. As part of our offering, our tokenization enables clients to create those tokens and reuse and recreate those across multiple blockchains, including Ethereum, Algorand, Terra, Tezos, and Polygon, which are supporting some of the issuances on there today. And then in addition, we can do that for the client. The client can also do that on a white label basis. And we have used this tokenization engine across the assets that I already mentioned. And those assets, of course, then may be able to trade on our exchange as well. This flow really shows the journey a client takes with Archax and how the tokenization function sits within the ecosystem that we've built. So if you take yourself as a client, and then once you've been KYC'd and onboarded with Archax, you can then, a client who's wishing to tokenize the assets can move those assets into Archax custody. And these assets, because we're a regulated custodian, these assets are held in a bankruptcy remote segregated accounts using a nominee trust structure. The assets are immobilized in safe custody, and tokens are minted representing the beneficial ownership of those assets. The tokens can then be held in custody. They can trade on our exchange, or they can be used for other purposes, such as lending, borrowing, or as collateral. In essence, the tokenization of an asset really does give much more flexibility in how to use that underlying asset. This diagram also shows how a client can directly access digital assets on our exchange, with the possibility, of course, of a 24/7 trading mechanism. Here you really see a deeper dive into what our institutional grade structure looks like. And this is really how we hold these multiple types of assets. So nominee trust structure for securities. And then in terms of security on the digital side, we have a security segregated solution delivered in partnership with Metaco and IBM. We've multi-sig process in place for withdrawals. We also have CAS permissions in place, and so for securities and cash, which is demonstrated here by the flow that you see in front of you. This is really an important differentiator for Archax. And as we face off against institutional players, what they really want to see is institutional grade regulated entities, segregation of assets, how they're held and by whom they're held is absolutely paramount. It's a key differentiator for us, and that has to be across multiple assets, both traditional and digital. So let's just look at maybe some of the key drivers that we've seen in terms of tokenization. And I've mentioned that we've tokenized a number of real world assets and traditional assets, including debt, UK gilts, Vodafone equities, carbon credits, as well as the Aberdeen Money Market Fund using our tokenization engine. But I thought we'd just take one example really where the asset managers are quite active, and that is fund tokenization. And really for them, the drivers of tokenization are distribution, liquidity, and efficiency. And really that the push for relationship with Archax is that they see this as being achievable through our ecosystem. So an issuer can access the primary platform, raise money into the fund. By tokenizing, of course, they're able to lower the minimum investment amount to attract a new set of investors who, of course, sit in a global pool of investors. They can also list on the Archax exchange for secondary trading, permitting and allowing a kind of permanent source of capital for the manager and bringing more liquidity to ultimately illiquid funds. Now, it also provides, in terms of efficiency, a faster route to market, improved communications and streamlined corporate actions on the post-close part of any transaction. And then it really leads to efficiency of improved reporting and interaction with investors as well. So really, if you look at what's happening in the space, globally relevant players are building full-scale strategies around the emerging ecosystem. So the buy side and the sell side institutions are now involved. And what's driving these institutions? So if you take the likes of an Aberdeen, like many asset managers, they see that within the next 10 years, the world will be tokenized, so assets will be tokenized, and the question for them really is, well, how do we get there? Who do we partner with to get there? And we help them and other managers in that journey. BNY Mellon, for example, in their decision to offer digital custody, that's really driven by the demand and requirement of their own client base, who want to really turn to a trusted partner who can offer solutions to them, both across the traditional and the digital world. The likes of BlackRock, for example, really looking at the tokenization of securities as the next generation for markets. They're not alone, as you see from this summary chart of some of the key players. But one thing that these players are all sharing is, of course, the belief in the underlying technology, in this newly built infrastructure for issuing, trading, and holding assets. And that really will enable access to a global pool of investors, the efficiencies that we talked about, and the liquidity, and also more dynamic use of the underlying asset. So why now? Why are the institutions here now? Why did it not happen, 3 or 4 years ago, when we were kind of thinking that the world of tokenization of real world assets would take off? The thing that's different this time really is that there has been and is a maturing of the infrastructure, and many of these players are actually part of that build internally and also alongside industry players. There is a confidence also in the evolving regulatory environment, not least in the UK, and that's those two core components, the infrastructure and the regulatory environment, really have been two core pieces that have enabled institutions to make a step into this space. Let's talk a little bit about regulations, and I won't get too deep into this, but what we're seeing, of course, is increasing regulatory oversight of the digital asset ecosystem. And of course, the industry welcomes regulatory oversight and wants clarity of what those parameters are. Unfortunately, jurisdictions are very much taking differing approach across those jurisdictions, and this has resulted in fragmentation, jurisdictional arbitrage, and different speeds with which different jurisdictions are adapting or indeed embracing digital assets. There are positive signs from a UK perspective, and again, for practical perspective from Archax, we kind of see the UK as progressing steadily along the route to become a global crypto hub, as has been really promoted from both policymakers and regulators. So from a practical perspective, steps taken by the Law Commission, by the UK jurisdictional task force, in terms of trying to provide clarity, the Financial Services Marketing Act, various sandboxes that are in place to allow the infrastructure players to participate and really develop this space. The direction of travel is very positive for the UK, and we're very pleased to be part of that in terms of our discussions with industry players and, of course, the regulators. Looking across this this kind of summary into the US and MiCA in Europe, as well as then advancements in other parts of the world, not least, and I should add, in the UAE, where Dubai has kind of set out some quite clear guidelines and rules recently that really kind of look to help push forward and help develop the industry. So if we kind of look at the journey so far, we know the size of the opportunity. We really understand that the institutions are here to play. We understand the regulators are on a journey to help get us there. Then what is required for greater adoption? Why aren't we there yet? If this really is the inflection point, then what is required for greater adoption? How do we enhance distribution and create a vibrant and liquid market for tokenization? We know these challenges are, but I think the good news is that they are being addressed. mean, education and awareness is still a very critical component of what needs to be done today. There's a need for change in mindset, helping participants identify risks, mitigating those, and moving on. Interoperability and standardization, it's still really absent today on a global scale, but steps are being taken to address that. GBP standards, of course, are trying to and have been trying to look at the standardization. Project Guardian and Onera with their P2P network of networks offering are also kind of taking huge steps to try and address this element of interoperability and standardization. Clear and supportive regulatory framework. Really, as we see, the fragmented nature of regulations is hampering the global nature of these transactions. But really, this is essential for tokenization to thrive and to ensure that tokenized markets are consistent with the regulatory aims of financial stability, protecting consumers, and ensuring market integrity. So really, the collaboration between governments, between regulators is paramount. And within the UK, again, from a practical perspective, the regulator and the government being very keen to engage with industry in consultations and working sessions to try to inform policy and to support the industry. Secondary market infrastructure. So this has always been kind of quoted as one of the biggest challenges to adoption. And really, developing this secondary market infrastructure and if you look at the trading platforms, custody solutions, settlement systems, really Archax has been on that journey and continues to build that out, including our digital CSD via our Monta subsidiary. But of course, the other essential element is the payment leg for these transactions. CDBC, stablecoins, or indeed bank deposit tokens need to come into play. And it's only really when these are in place that we will see the true benefit of tokenization being realized. Reporting ownership on a blockchain or tokens freely transferable between wallets, for example, cannot be realized yet on the secondary market, within the current regulatory parameters of a number of jurisdictions, including the UK, for example. The other piece there is really collaboration. Collaboration and partnerships are essential. Fragmented silos of the large players doing their own thing within permission blockchains is still happening, but industry leaders do need to collaborate. And there is some move towards collaboration, both with the large corporations and also the regulators. Digital asset working groups within IOSCO, FinTech Task Force, the FCA working together with the Financial Stability Board as well. Quite a few initiatives happening around governing and drawing the parameter for the playing field for these digital assets. I think the piece really is these challenges, or indeed these actions that need to be taken to achieve greater adoption, really do lead us to the ultimate benefit of distribution and liquidity, because when all of these other challenges are worked through, then distribution and liquidity will be tangible. In addition, we feel what's needed is really good quality assets coming to market that investors have confidence in, where they understand the risk profile and can get a good return on investment, which are not subject to significant volatility. And we do see tokenization of assets such as money market funds really to provide a catalyst to mainstream adoption and to growth within the industry. So we work together with a number of global partners on our journey of building the ecosystem and continuing to achieve just that. It is an exciting road ahead. We continue to build alongside these other market leaders. Through collaboration, we're helping to move the industry forward, and we're really doing so at this very exciting inflection point. That's it for me for the moment on the presentation, but I thank you for your time on that, and I welcome your questions.
Thank you, Breige. I'm going to turn my video back on and come back. We really appreciate you sharing your insights about the tokenization of real-world assets, what's happening today, and how we can gain traction in reality. Again, I'm Diana. I'm Head of Research and Sustainability within GBBC, and I'm going to take some questions. So getting started, Breige, Can you provide some examples of certain real-world assets that you think are particularly well suited for tokenization that you're working on? What are you most excited about?
Sure. Thank you, Dana. So I think, as I mentioned, we have, through our tokenization engine, we have tokenized debt, equity, carbon credits, and funds. I think what we're most excited about, Dana, is the tokenization of money market funds. The reason that they lend themselves to tokenization is twofold. One, in terms of a distribution channel for the issuer, and two, significantly, is the access point for investors to get into a relatively solid and non-volatile investment opportunity that they could not access before. Now, in that process, the efficiency, of course, that's achieved through tokenization in terms of distribution of payments, in terms of corporate actions and communications with holders, all of that comes into play. What the real significant point around settlement, really kind of real-time settlement is also something that will come into play when we have the digital CSD. But today, that's one of the most exciting, interesting, instruments really that's come to the table, because you have large institutional player who wants to look at distributing this out to market, and then for the first time you have access to that from a much wider pool. Now, we do believe, we have, obviously, in terms of real world assets that come through, those assets have the possibility, of course, to not only have a tokenization, but also to kind of raise capital on the platform, to trade on the exchange, etc. But ultimately, we do see the institutional player wanting a high quality asset, and we're most excited about those types of assets coming on the platform.
Lovely. And how does Archax differentiate its offerings from other platforms or companies in the asset tokenization space?
Yeah, so it's a really good question, and we do get asked that a lot. I think the answer to it is really where we sit, where the tokenization part of our offering sits within our ecosystem. So if you think of the tokenization engine itself, it's really only one key component. What we have is the ability as a regulated entity to hold in safe custody the client's underlying assets in a segregated, secure, bankruptcy remote way. Those assets, in addition to being held in that way, and therefore in safekeeping, which is absolutely fundamental from an institutional perspective, what we can then do, of course, in addition to tokenization, is that we can, through the Archax offering, you can actually list those directly onto our exchange. You can also then utilize and use that underlying asset and the tokenized version of it for collateral, for lending, for staking, and indeed, for other purposes as well. You can, as an investor, come in directly into our exchange and also then participate across the many offerings that we do have.
You mentioned also the role of standards for tokenization among other across platforms. Could you expand a little bit more on that? And what do you see going on a day-to-day basis, and where do we still need more harmonization on standards?
Yeah, thank you. So today there's a lack of standards in terms of protocols, in terms of the technology. So it's very difficult to ensure friction-free transfer of assets today. And so, what is required is really a standardization of those protocols and smart contracts, which would enable compatibility and facilitate trading. And that's absent today. So there are activities obviously taking place to try to address that, so that really that integration can happen across those protocols, and fundamentally also integration with existing systems, because from the institutional level, they also want to see that capability to integrate with quite a lot of their systems, which they've spent, a significant amount of years and resource building. So those pieces really are absolutely essential.
I thought it was also fascinating the way you shared the numbers of the total addressable market. And can you expand on what are the primary benefits for institutional players to engage with the Archax ecosystem in this space?
Yeah. So I'll maybe refer to a very interesting questionnaire that was circulated by BNY Mellon during the course of last year, and 6SDX in Switzerland also had a similar kind of outcome from a recent questionnaire this year, I believe, as well. And basically, it's a kind of question out to the global network of asset managers. What are they looking for? What do they want? How do they see the future in terms of tokenization, and who do they want to partner with in doing that? And so kind of when you look at that, when you break that down, what you will see is that significant number of asset managers see tokenization of assets and their participation in the world of digital assets to be very significant over the coming 12 to 18 to 24 months. What they want to do is to partner with trusted third parties who they know and trust. They want to do that across their entire holding, whether that's traditional or indeed digital. So their access point into digital is one whereby they will use and utilize the trusted known players that they have, and that they will want to ensure that any third party counterparties who they really face off against are of that institutional grade, have the relevant regulations in place and relevant licenses in place, and have the relevant expertise to understand what institutional grade means for them.
Mm-hmm. And then we got a question from the audience, and I'm assuming this is from an institutional perspective, but can one get partial ownership interests?
So this is fractionalization of assets. So if you take an asset class such as a real world asset, such as a piece of real estate, such as a piece of art, the tokenization process enables you to issue a fraction of ownership in any underlying asset. And again, the application of that in real world asset terms could be indeed fractionalization of a building, for example, fractionalization of equity in a company that owns a building, for example, which was, I think, the Aspen deal many years ago, and a number of real estate deals since. Similarly, in a piece of artwork or any other real world asset where you can have fractional ownership of that asset, your beneficial ownership of that underlying asset is what can transfer. So you have liquidity then to move that on an exchange, for example.
Great. What about on a regional level? Someone's asking, how is LATAM doing with tokenization regulations? And I would also expand on that if you'd like to highlight any region-specific regulations for tokenization that you're looking at.
Yeah, so we're out of the UK, as I mentioned, and we've been working quite closely, obviously, with the FCA and the UK regulators here as they shape out what the regulatory parameter is within the UK. But of course, and within our common law structure, we kind of feel quite confident that this is and has the potential to become the kind of the global hub for crypto and for digital assets. Now, other jurisdictions that really have led the way and kind of have really demonstrated quite direct rules in place for digital assets include France, Switzerland, Luxembourg, for example, and then more recently in the UAE, Dubai. I'll just give you one example of Luxembourg. So Luxembourg as a jurisdiction have had specific rules really pulled up for the purpose of digital assets, and even to the extent of how you transfer on chain. So Montes Digital that I mentioned, Montes is a subsidiary of Archax. Through Montes, we will have a digital CSD and therefore the ability to settle digitally natively issued securities. Now, with the likes of Luxembourg, for example, have regulations in place that enable that to happen on chain and enable that transfer to happen on chain and be recognized legally as a legal transfer on chain. Many jurisdictions, including the UK, are not yet there with that. But that said, they are also looking at how is that achievable. How do we kind of make changes to the existing financial markets infrastructure? And so, for example, in the UK, the DLT sandbox, HMT DLT sandbox, enables those financial institutions to participate and look at issues such as this. Latin America, I can't really speak to in terms of specific regulations out of that region, but what I will say is that those leading the charge have certainly been the ones that I've mentioned. I think Dubai is very interesting, more recently, given the clarity that they've provided on these assets. And there's still some way to go for the UK, but we certainly feel that they have the kind of direction of travel is correct. And of course, MiCA, as you look throughout Europe, is a pretty significant piece of legislation then for the industry too.
To address the question also, I will say GBBC has an open source and crowdsourced tool called the Global Standards Mapping Initiative, GSMI. We release it officially every year, and we're looking to obviously our upcoming release in Q4 in the coming month or so. And we do have an interactive map of regulatory developments across over 210 jurisdictions. And if you go to the site on GSMI and go to the map, you can hover over countries in LATAM or all over the world and see what they're doing with regulatory developments. Some of those would obviously be relevant to tokenization. What about other real world assets? Technically, so many things, like the concept that a real world asset would be an asset that has value off chain and you're representing it through tokenization on chain, and that could be anything. And someone's asking here if you tokenized machinery or have any case study with that sector. Have you seen any opportunities, any movement, any traction?
So I think if you take a step back and you look at what can be tokenized, if you kind of look across the vast pool of privately owned assets, anything can be tokenized. But the question then becomes, well, how do you put a market around that? What's the supply? What's the quality of the supply of the asset? And then fundamentally, where's the demand? Is there demand for that product? Is there demand for that asset? Can you do something with that asset in a tokenized form that you couldn't ordinarily do before? Can you make it liquid by tokenizing it? Can you use it as collateral by tokenizing it? Is there demand for it by tokenizing it? Any asset can be tokenized, and that's really not the difficult part. The difficult part is, how do we get liquidity into it? How do you get it distributed? And the challenges that the industry have had, as I laid out in the presentation, is really the kind of the lack of regulatory clarity, the lack of infrastructure, the interoperability. It's kind of all of these hurdles are in the way to really enabling us to have the full benefit of the underlying technology and achieve that liquidity and distribution element, which is so critical to its success. So if you kind of, when you look back at that, anything can be tokenized, but should you tokenize anything? It's really should be, really kind of looking at what's the high quality asset coming to the table, where's the demand for that, and then how do you connect the two, and what are the institutions, because we feel that that's the pivotal moment in terms of mass adoption. What is of interest to them, and how can it therefore trigger mass adoption of this technology? The other piece, of course, is enabling access to everyone, right? So why can't I, you, anyone on this call access Aberdeen money market fund, an asset management money market fund, carbon credits, a fractionalized piece of an art? Why can't I have that all in my portfolio and manage it myself? Well, you can through tokenization.
Exactly. And as you had said so accurately, it's about enhancing distribution and ensuring vibrant and liquid markets among the real issues of focus, and addressing whatever challenges are getting in the way of that. Moving forward, how do you envision the future of asset tokenization, particularly for real world assets? And I'm going to combine that with question from another question from the audience saying, are you seeing any reticence this year from institutions for your tokenization product after 2022 being potentially tumultuous and Terra Luna and FTX failures? How can we rise up from that potentially?
Yeah, absolutely. So maybe just take the second point first. I mean, for sure, you know, the industry has suffered in terms of the backlash, if you will, in market around, you know, FTX, Terra Luna failures that have happened. But if you go back to, again, some of the challenges that we have in market around, you know, education, understanding of what this is, that's really where that conversation starts. Because, you know, the tokenization of real world assets, tokenization of securities, this and the use of that underlying technology is very different to how that underlying technology is used in the world of crypto. But beyond that, even looking at FTX, for example, where you have bad actors at play, poor governance in place, lack of experience of the team, and, you know, absolute just plain fraud, it would seem, then, you know, those are kind of failures that could happen outside of the world of digital assets, or indeed the underlying blockchain technology. So the impact of those events certainly has ensured that the importance of education and understanding within the industry, within the risk and compliance teams of some of these players who are coming to the table, is also understood. And so once you have a level of understanding, once the participants have a level of understanding of what this is and what it is not, importantly, then there is, you know, then there's certainly appetite to go forward. If you think back to the slide on the element of adoption and the kind of big institutions coming in to play, notwithstanding the events of 2022, I think there is a real acceptance of and recognition of the benefit of this underlying technology and what that can achieve, you know, for these institutions, for investors also, and ultimately, you know, that understanding what these other failures are and how they will not and should not impact the direction of travel for the institution. So when you look at what is you know, what's standing in the way of adoption, we don't see that as a significant pillar, if you will. The other pieces that we spoke to, liquidity and distribution and interoperability and standardization and regulatory clarity, those are all much more tangible reasons that you know, institutions are kind of are coming into the space and working through, collaborating through to kind of deal with those issues specifically. So as they fall away and as progress has been made, then, you know, you'll see more coming in. And by the way, institutions often, you know, of course, from a risk and perception perspective, many institutions are also using permission blockchains for their own projects internally, right? So they kind of are running projects in silos. They're running projects that are utilizing the various blockchains and protocols for their own within their own shops, if you will. So that's also a way of mitigating risk for a number of these organizations, but that will need to change, of course. Collaboration is absolutely what's required for the industry to kind of move forward. And you know, there's probably a discussion around moving from private to public blockchain for these organizations too. The other point that you'd asked, Diana, just around the kind of the future for real world assets, you know, I kind of go back to, you know, my days at Securitize, you know, 2017, 2018, when the ICO world was kind of the craze, and when Securitize were probably the first in market with a fund, Spice VC is the first tokenized fund, regulated tokenized fund doing that. as kind of regulated offering. Even at that stage, we were looking at the adoption of real world assets and the use of this technology for real world assets. And I just, it really, there were many examples of kind of one-off type projects and quite, and some landmark transactions, some landmark real estate deals, for example, some kind of quite interesting transactions coming through there. But there were really one-offs. They didn't really gather momentum because the other pieces that we've already spoken to aren't there. What I would say about the future of real world assets today is that as the barriers that we've listed, the challenges that we've listed, keep getting chipped away at, then this world will, this world will open up. Again, I'd go back to the point around the quality of asset. That's always been the case, because once you have the infrastructure in play, where you have the ability to issue, to settle, to trade, to custody, and have the payment leg in place for that, then this is really where the true efficiencies come into play for real world assets.
Fantastic. Thank you so much for all these insightful answers. We have a couple more, and the next one would be, is the industry looking to improve the technology stack via startups in order to improve the whole process of tokenization? For instance, is Archax interested in partnering, investing, or acquiring startups that are developing solutions for tokenization? And what are some areas that you would love to see solutions developed?
Yeah. So thank you, Carlos, for that question. So, I think we are always moving forward in our build of this ecosystem. And whilst we have our tokenization engine today, and that has certain capability, what we're continuing to build out, of course, is the smart contract capability alongside that as well. So getting to a point where we are, really fully functioning on the corporate action side, or on distributions, corporate communications, all of that build out is absolutely essential within the tokenization engine. Programming, these smart contracts and the interoperability across other engines as well is going to be absolutely critical, particularly where issuers may want to list not only on our exchange but on others as well. So there is a build that continues to take place. We are always looking at and discussing partnerships with with kind of key market players. Absolutely feel free to reach out, Carlos, as well. We're always keen to see how we evolve. But certainly in terms of Archax development and kind of pushing through in the tokenization capability, it's really kind of looking at that, building out on the smart contract side of it now as well.
What about in the realm of real estate? Do you have any comments on tokenizing real estate? And there's a question about tokenizing real estate in the Netherlands in specific. Yeah,
well, in terms of the Archax regulations that we have are kind of UK specific at the moment, but we are actually going through our European license applications at the moment via the Netherlands. So, in terms of our capabilities in the region, then that's coming soon. Real estate, I mean, I don't have the demographics or the graphics of the projects out of the various states within Europe, within the Netherlands specifically as well. But what I have seen, of course, is the kind of drive towards real estate tokenization and the kind of peak and trough, if you will, of interest in that. I would just strip it right back, Diana, to what I said earlier. What's the quality of the asset? What's the demand for this asset? And then what can you do with that? And those are kind of key components. The cost of, looking at tokenizing an asset also needs to be considered versus a traditional asset of today. A number of projects that exist kind of are carried out in the mirror world. They're carried out in the traditional world and in the digital world. It has to be a cost-effective route as well. So it would depend on the asset. Is there demand for that asset, and therefore, can we help with the distribution element of that together with, is it going to attract liquidity and that element? But again, one single asset is not going to be enough to move the dial.
True. We talked about ensuring liquid markets and distribution, if we finalize with a note on security, how does Archax ensure the security and safekeeping of digital assets, especially given the inherent risks associated with them? And how does Archax prioritize security and trust in its platform and offerings throughout?
Okay, thank you. I'll maybe just take you through to a chart that will help me show you this, actually.
Absolutely.
So this is our regulated custodian solution. So as a regulated custodian, then we are able to hold all types of assets, both traditional and digital, as I mentioned. With that, of course, we are holding those assets in safekeeping with institutional controls and processes. We have CAS permissions for securities and for client funds. What that means in the UK is that we have to, under regulation, we have to keep client assets segregated in separate accounts for those clients and in a bankruptcy remote way. So that's a requirement on a regulatory perspective. Now, for the digital part, we secure segregated solution developed in partnership with Metzco and with IBM. And we have full chain analytics and ongoing reconciliations. We then also have multiple approvals on withdrawals as well. And then in terms of our staking capability, which is also there for assets for clients should they wish to avail of that service. Again, because we are regulated, then we have had the need to have that robust institutional grade level of security in place, both in terms of our nominee trust structure for assets, our CAS permissions for securities and client funds, and then of course in terms of our Metzco and IBM partnership for digital securities as well.
Well, thank you so much to Breige and Archax for joining us today for a thoughtful and engaging presentation and Q&A on the tokenization of real-world assets, which is such a big topic in the space. We look forward to learning more about Archax's progress, and a recording of this presentation will be made available to all those who registered, and it will also be made available and shared publicly on GBBC's YouTube channel. Thank you so much and have a great rest of your day.
Thank you so much. Thank you.